Hello and welcome to BQ Pramami Rangadia. One company that is in focus is Raymond Limited. They've clearly doubled their net profit on a yearly basis, and it's the highest ever for the year as well, with almost a 31% growth coming in terms of the top line. Let's quickly look at the quarter as well. Revenues grew by around 8%. Apart from that, if you see in terms of the quarterly EBITDA, that's been the highest as well, and a margin of 17.3%. The company has been able to reduce debt to the tune of 399 crores as well. Joining us on the show to discuss more is Amit Agarwal, Raymond Group CFO. Welcome to the show, Amit, and a pleasure to speak to you as always.
Thank you.
Amit, if you could help us understand, has the quarter met your internal expectations?
Absolutely, it has met all our expectations. We are quite satisfied with the performance. I think we were very clear right at the beginning of this 22-23 that we had a very clear, robust plan that how we are going to go about in every segment of our business, be it the lifestyle business, be it the real estate business, and so on and so forth. So, based on that, I think what we were able to identify the niches and the opportunities for growth, and as well at the same breath, we continue to stay focused on our cost, that we did not went out and increase the cost. And I think that operational leverage has helped us in order to improve our margin and deliver the highest recorded EBITDA of over 377 crores. I think that has been clearly a journey which is very good, very satisfying. Exactly all the management teams have identified their clear plans, how they want to go about it, and they delivered and executed the plan, fulfilling each one of the parameters.
Right. So, Amit, if you have to see on a quarter-on-quarter basis, we've seen a marginal dip that has come in terms of the margins, right? What's the reason for that?
Okay, I think that's a very good point. You see, what we have been doing till last year, we have not been investing big time on the advertisement. And I think what sells, what you see will sell well. And I think that is a very, very important aspect to understand. We are in a product which is a completely discretionary buy. So therefore, we have stepped up our spend on the advertisements. I'm sure many of you watch the IPL matches. You see every time our ads which is coming on the IPL matches and on the newspapers. So we have stepped up a little bit of a spending on the ads because that is an investment we believe very strongly will enable us to drive the revenue growth and help us in the operating leverage. But however, the margin is a very small reduction in the margin compared to the previous year's quarter. And it is a genuine, thought through, calculated plan to invest behind the brands and behind this. Second, we have also launched our ethnics. You know, in weddings, it is very clear ethnics is a big role and the suits play a big role. We have been already a leader in the suits, and there won't be a wedding in India which would not have Raymond suit. So therefore, we have stepped up our investment also in the ethnic space, though it is a franchising-led model for opening stores. Like in this year, we have opened almost 65 stores for ethnics, which is further going to help us in order to grow and drive the revenue. And so these are some of the investments, very clear, thought through, we are making in order to drive the growth. And we are not looking 1 quarter, 2 quarter performance. We are on a long haul basis that over the next 3 to 5 years, the company will see a phenomenal growth and explain in every segment, be it in the lifestyle or in the reality segment.
Sure. So overall, Amit, now if you have to see in terms of the various segments of business, right, from real estate, engineering, denim, branded textiles, apparels, shirting, garmenting, which have been actual growth drivers for the company?
Actually, I would say that at different degrees, each one of the segment has grown. So we cannot complain that A has not grown or B has grown. Obviously, the single largest growth has come clearly in the garmenting export as well as in the real estate business. Very, very clear, big time big growth. But that was very expected. If you look at the apparels, they have done well because that is a growth engine for us. It will do well. So I think every segment has their own cutout strategy. How do they want to grow and how they will grow? Now, some of the sectors which are already matured, let's say the suitings is a very matured sector where the growth will not be similar to what you see in the apparel. So you will have varying degrees of growth, but as per the expectation, each of our businesses have come live. And I think that is very, very important and satisfying for us.
Right. So from here on, now that we know that the company is looking at the demerger, sales of the FMCG business, and then we will have two pure play listed entities, how is the strategy going to be rolled out?
So actually, if you see the FMCG transaction is done, we got the money yesterday. So that way, this transaction is done. And as far as the demerger is concerned, it's a very clear, as you rightly pointed out, pure play, net debt free listed businesses to focused on lifestyle as well as on the real estate. Now, if I look at it, the two things very fundamentally, the businesses have clearly outlined a chart and a growth plan for each of their segments, be it in the real estate, be it in Thane land or in the JDA side. Similarly, if I look at in the lifestyle business, the apparel, the athletics, the shirting business, if garmenting, we are investing behind in the garmenting lines for exports and we expand the capacity by almost 35% from the current level. Similarly, on the shirting side, we see a double-digit growth in terms of the revenue as we want to expand the portfolio. So like that, we are seeing very, very clearly an identified strategy. And today, the big theme is also the retail expansion. That over the next 3 to 5 years, we will be opening more than 500 stores, taking the count as high as 2,000 stores. And that is going to change the whole dynamics because, again, once again, what you see, you can sell. And therefore, I think very, very important theme will be retail expansion, building and strengthening the brand, invest behind the brands, as well as create more retail footprint, innovative. Similarly, in the past, people would consider Raymond as pure formal play. Now we have got almost 30 to 35% of our products getting into more casual in nature and bright colors and so on, prints. So these are some of the new things which we are rapidly developing, innovating, putting a lot of effort on design in order to take the business to a different level.
So Amit, overall, if you see, the domestic business, there are drivers which are firing. However, if you see in terms of the export side of the business, specifically US, UK, Europe now, what are the indications that you're getting and how is the demand panning out?
In terms of the garment, we are seeing a very bright opportunity for us because of simple reason that all of us have witnessed a K-curve recovery. And in a K-curve recovery, the people who have got ability to buy a $300, $500 suit are very comfortable. They are not shying away from buying. And that is exactly that segment we cater to. So we are not catering to the segment which is buying $100 suit. So therefore, we have seen all through that the demand for our product has been there and we have been booked out for the next 4 to 5 months. As we speak today, I'm booked out all the way up to August and September. So therefore, we see a very comfortable situation and that is why we are investing behind also. When we are increasing our capacity by 30%, that means there is a very clear demand expectation, commitment we have seen from the various customers whom we supply to.
Right. And in terms of the retail network, what's the expansion strategy looking like?
So, as I mentioned, that we are planning to have anything between over the next 3 to 5 years, more than 500 stores, taking it from a current 1,450 odd stores to 2,000 stores.
Right. And in terms of the pipeline for real estate, how does that look?
So, real estate, very clearly, you have got 3 projects running at Thane. First 2 projects are already 80% sold. So now you don't have much of an inventory left to sell. And even the third project which we launched, within a week, we could sell 100 apartments. So that shows that the trust which is built by Raymond in terms of fabric is a similar level being built into the real estate side. And I think the demonstration is very clearly if you deliver the apartments 2 years ahead of RERA, today every home buyer wants to move into his or her apartment sooner than later. So we have still a 60-acre land parcel available to us to develop. And the other thing is also the JDA road, because in the JDA, we don't have to invest behind the land, which is a corporate decision and the board decision has been taken, but we are getting new projects on the JDA. We continue to evaluate, do a proper diligence, and once the diligence is done, then only we move forward. Otherwise, we don't want to take risk, we sign, and maybe we don't start. I don't think so that is a philosophy of the group, that we want to be very committed. What we get into, we start and we deliver. You see, we told the world that we will be debt free in 2025. 2 years ahead, we have been able to do a debt free company. Similarly, we said RERA, we were able to deliver 2 years ahead of RERA timeline. So I think very clearly is the theme is that deliver more than what you commit.
Absolutely. So overall, very lastly, in terms of growth for FY24, what is that expected to look like? And secondly, what's the key milestone we're looking to cross?
So actually, you see, in terms of the FY24, we see now we have got a very strong base. We want to build on this base and grow further in each of the segments in the businesses. The retail expansion is a big focus area. The projects to be launched in the real estate is another big area, because you've already sold 80%. So that is one. Possibly a launch of a JDA project as well. And I think expansion of the garmenting lines, that's another piece. And investing behind the brands. So I'm not looking that I'm investing today for 1 year. I'm looking at it, this investment we do consistently will bring the brand over the next 2 years, 3 years, a big growth revenue potential.
Right. So I think a lot of things that are brewing now with Raymond, with a lot of strategy changes that are happening as well. Firstly, congratulations for the same, and good luck, Amit, and thank you for speaking to us at BQ Prime.
Thank